Hey gang, it's Ziad and Rob here.
Hey, everybody.
Looking forward to sharing some insights on today's trade. I did a lot of trading in the live trading room today, and a lot of new tools have been released on these excellent member exclusive indications. And Rob is going to show you and show me where I could have done better and avoided some pitfalls. So on the market move today, in and around this area, we were looking at the market transitioning from a sell zone to a buy zone. And on shorter term timeframes, it was fully bullish. It was not bullish enough on the longer term timeframes, i.e. hour or higher. And I actually tried a short here. That was a mistake. That was an unforced error. Rob will talk to you a little bit about some tools that can help with that. On the way up, continue to try a little bit of long and led into a market with a double top. The market move in the afternoon was the area where I was able to make some money, as you can see on my dome, ticking live away in front of you, grossing about $1,450. And again, past performance is not an indication of future performance or results. I cannot guarantee that I can do this or promise or claim to do so on a day in, day out basis. When you look at that signal, it is visually impactful. We changed from a thinning champion cross buy zone, crossed below the visual trend channel, and boom, that drop led to a set of signals that are not arbitrary. They are clear, they're algorithmic, and of course, what did we get? A champion cross sell zone, followed by Rob's IRB strategies, followed by a continued sell signal over here. It's a wealth signal short dot, and of course, the breakout forecaster. It helped us support short side decisions, which is the way I was trading this afternoon. Now, Rob, on the way up and in this area, I'd love to get more insight from you because trading involves risk and unforced errors can happen, mistakes can happen. How can we use the tools to make better choices? Over to
Yeah.
you, Rob.
Yeah, so thanks, Ziad. So let's go ahead and take a look here at a couple of things, gang. First of all, let me just go ahead and give you a quick update market-wise. I want to make sure I get that in. Sometimes I forget to do that. So before I do that, I wanted to go ahead and make sure to share with you, this is still a major resistance on the SPY, the 420, 422 area. Remember now, this goes back for quite some time. In fact, we could see even in January, February of last year, we went ahead and hit this area of support, then hit it again as support, hit it again as support. Then we finally broke through it there in the early summertime and then rallied back up to it in the early summer and then rolled over. And every time we've hit it since then, you can see it's been resistance. So that is still a massive resistance area up above. So in this area, while we broke above the channel looking for long side trades, we saw the resistance coming in above us, which stalled us out a couple other times and then rolled the market right back down. So this opens up long side and short side trading in that area here. Now, you'll notice this all comes off of the heels of course, the divergences that took off in the market here. And then you'll see actually a negative divergence up here. So we're going to talk about those for a few minutes, and then we'll come back to Ziad's trade after we're armed with a little bit more information that you should know. So first of all, I'm really excited to go ahead and announce that we just released, speaking of divergences, the Divergence Tracker Scanner, and it is incredibly powerful. The Divergence Tracker Indicator, it literally took a couple of years to build this in finally the way I wanted it. And so we finally released the Divergence Tracker Indicator at the most recent Wealth 365 Summit 2 weeks ago, and people have just absolutely loved that. But now we released the Divergence Tracker Scanner to go with it, which tracks not just locked in divergences, but it also will do potential divergences for you, negative and positive as well. And you can do a lot of filtering with it. So armed with that, let's go ahead and just take a look. I want you to get real good and used to, because this is a Wealth Charts exclusive. You get divergence indicators almost anywhere. Most of them are really, really bad. They go several bars beyond before they go ahead and actually fire anything off. And by then, you're way on the wrong side of it. It's like, oh, I wish I would have known that earlier. So the Wealth Charts one is much more proactive, and in fact, if you allow it to, it'll actually even identify potential divergences as it's happening, which is why we have the potential divergence scanner there as well as in the indicator. So we'll just take a look at the NASDAQ 100 here. Here's the ones that are firing off right now, these divergences, and this is really powerful because whether you're a day trader like we were showing you just a moment ago, and we'll look at more in a minute, or you're a swing trader, this is huge. If you're a a swing trader as well, because like, we'll just go through each one of these that matches up with all these over here. So Apple, you can see here with the weekly chart, we had a positive divergence and had a really nice move up the last several weeks, to the upside. We went ahead and had Airbnb, right? So this had a really nice positive divergence here, and now is moving up really nice, approximately $40. Then we look at ADP. This had a really nice negative divergence here, as you can see over in this column, and look what's happened since then. These are, pretty healthy moves, $50 moves back to the downside. It's nice to know these things so you're not the one buying it thinking, ooh, breakout to the upside, and then get caught with it rolling over. Okay, now we're going to talk about this as it relates to Ziad's trading a little bit, though. It's a great indication telling us where we don't want to necessarily make fresh moves to the into this because of the potential divergence, but doesn't mean to necessarily go short if there's an uptrend in place. Okay, let's take a look at AstraZeneca. So here you can see not only the current divergence that's firing off, that's right here, so full bars back ago, but it also went ahead and had a divergence right over here too. And if you take a look at that, roughly the $68 level, and dropped down to roughly the $53 level here, so about $15 there or so. So, some pretty nice moves, that can be avoided where you're getting into these trades only to have, then you're sitting on dead money for a while, really stressing or taking losses. Now, Costco right now is currently on a bullish divergence, which that's correct. It is right here, roughly the 450 area that popped up here to approximately the 530 area. So, pretty good move there, $80 or so approximately. But then you can also see where we had negative divergences on this. Now, this is a weekly chart. So look at the moves here on this, because it's really important to impress this upon you. So this isn't just a day trading thing. This is as much, if not far more, a swing trading thing. Because you see, this was approximately 610 plus, and it moved all the way down to about 410. That's like a $200 move, back to the downside. And so if you're the person who bought into this thinking, wow, it's going to go off to new highs, you weren't paying attention to the divergences. And actually, if you see, there's actually two divergences in there. You'll notice if we look at that a little bit closer there, there's actually two lines there from here to here and here to here. So, and then right over here, you'll notice that we had a negative divergence too. And so for months, it went to the downside here. So it's really great to identify these. And again, they show up really early, or will actually show up as they're actually happening if you turn on the potential divergence marker here. So I'll just go through a bunch of these more quickly here. So over here, you see a negative divergence. Then over here, you see the positive divergence start to turn around here. As we go ahead and we look at Marvel, let's see, nice positive divergence starting to form here. Moving Micron Technology had a big divergence here, and now it's on the positive divergence side. So you kind of get the point. What's happening, these are all being identified, and you can have your filters set this up for brand new divergences up to a certain number of bars ago. You can even go ahead and have it tell you if there's more than one divergence firing off at the same time and filter for that. So really great stuff. So you'll notice here, this one was really exciting. It had the downside, the buy side, and then here it had what's called a potential divergence. Now, what's nice about potential divergence, and I taught this the week of the Wealth 365 Summit, which is nice, is that if you break through a failed potential divergence, that's where the market can often really start to run from there, right? So think of it in terms of if the sell doesn't sell, maybe it's time to buy, right? And so you'll notice, isn't it interesting that it got right back to about, so it pushed up, roughly $10, pulled back roughly the $10, and then took off to make even higher highs. So, these interim divergences can be really great fresh reentry signals all in their own. Then, of course, you can go right over here, the very next one. I'm just going in order, showing you every single one. There's nothing being left out there. And so here, you can see the sell side, buy side, sell side, buy side, sell side, sell side. And these had very, healthy moves to the downside, as you can see from their peaks there. So that was roughly $115 or so, just on that one here. And then this one went from roughly $780 down to about $670, so about $110 drop before pushing back up here. So it's really neat. And then the double divergences, let's zoom in out a little bit, or zoom into it a little bit so you can see that. You'll notice here that you actually have a double divergence taking place from here to here and from here to here, and then it's making this nice move back up over $40+. And so, and also you'll see that little double X. So the point is, divergences I've taught you. As anybody here who's listening to me today, as many years as you've taught me or you listen to me, you've heard me talk about divergences. It took decades to finally get here, and the last 2 years of developing this, to get a divergence indicator that is superior to anything I've ever seen before, and I'm super excited about it. And now we have the divergence scanner to go along with it. All right, so now with that all in mind, let's go ahead and talk about what Ziad did here this morning. So we had a divergence go ahead and fire off back to the upside, and you'll see what happened was it started pushing up, and we actually started going green on the champion cross and green on the champion trend. Well, one of the trades that Ziad did this morning was that he shorted as it was coming back down through this area. Now, that's a big no-no from my perspective, and he knows that. He got caught up in the moment, but I've gone ahead and told them, I only want to look for longs if I have my 1 minute, my 5 minute, and especially my daily all in the same direction. Well, the hourly. Now the hourly here, the hourly was basically no trend. So the hourly was not with us or against us today. This is another new indicator we released in Wealth Charts at the show, which was the technical damage indicator. So when you're in this technical damage area, I like over here, this is pure upside from my perspective. But so I want to really look for longs, no shorts. In here, I can look for longs and shorts pretty equally because the hourly chart is not bullish, it's not bearish, it's in a technical damage state. So that was another great release there. So armed with that, when this was going up, I really wanted to focus champion trend and champion cross. We're bullish. The only kind of trading I'd want to be doing is long side trading. And remember what I told you is I'd want to be doing that trading as soon as we start to come out of the champion cross, right? So right up here. I don't want to, if I wait till up here or up here, it can be too long. So what Ziad did here was he shorted earlier initially, and then that caused a stop loss. And then as he was trading up here, he was a little bit too late on some of the entries, in my opinion. So with that being said, those are a couple things that he could have done better. Now, yes, you saw he grossed $1,450 today. So in the end, he had a really nice day there, and the trading room got to see some of that trading and, watched his logic and how he, preluded everything he was doing, explained it away. But the thing is, and that's great, $1,450, but trading balls lost too, right? So he had a loss. So remember we talked about, you got to cut the losses short. You can't let them just run here. You got to cut them short. And then remember what I said, the actual entry, if anything, would be to be with the champion cross. If you remember my video from last weekend, I made money, but there was one trade where I didn't quite wait till it got through everything I wanted to get through. Go back and watch last week's video if you don't recall what I'm talking about. But what happens here is it fired right back off into the direction of the uptrend with the champion trend and the champion cross firing off. This should have been long side city right from there. Now, the one other trade from my perspective, and we want to make these learning opportunities for you because it's great, with $1,450 gross profit on the board. But man, imagine if you could knock out some of those, losses along the way. And then your equity curve, right? Instead of looking like this, right? It'd look a lot more like this, wouldn't it? Right? So
absolutely.
So what we're trying to do is nix out some of those, unnecessary, as it says, unforced errors. So one other thing here so now this brings us up to the negative divergence. Now I want to be extraordinarily clear to my student family because I've created something absolutely incredible with the entire divergence tool, scanner thing we've talked about. You guys have gotten to see this in action over and over and over again, like during the week of the summit. It's a powerful, powerful, powerful tool, but it's not meant to be abused. And so what this is meant to tell me when I get a divergence, a potential or a locked in divergence like this, what that usually tells me is, okay, you know what? It's great. There's the entries over here. It came back down, bounced off those entries, came back down in, bounced off. That's an entry. Great. But then right over here, as soon as I start locking in divergences, that's basically saying step away, not shorting. Why? Because if I'm shorting this, I'm basically counter trend in my world. I understand the hourly chart was sideways, but the 5 minute chart net, the champion trend and champion cross, trading against those is very hazardous to my financial health. Okay. Now, in that being said, I feel like I'm in that Tom Cruise, the original Top Gun movie, where, what's her name, Kelly McGillis, something like that. She's like, he made a great move with this S turn and this really super move, but they're basically saying, don't do this, but it worked out anyways. Well, so that's basically what happened here. The divergence was powerful. These divergences are powerful, and they will, as you just saw, all of the divergences I just showed you went and did, more or less go back and do what they were supposed to do. We looked at every single one that popped up on the NASDAQ 100, and every one of them did what they were basically supposed to do. That's great. But what I do with this, my fundamental philosophy is that's an area to back off, not go ahead and short, because when you short it, now you're basically counter trend trading. And unfortunately, as soon as you start counter trend trading this, it will teach you to go ahead and just always try to catch the top or catch the bottom, whether there's a divergence there or not. So he had a very high probability trade to the downside, which he did end up taking. But for the average trader who's a cautious trader and is trying to become more of a confident trader and a calculated trader, trading counter trend typically is not the best. And I think you would wholeheartedly agree with that, Z.
I fully agree with that. The power of the divergence tracker is not just when it locks in. You actually can set it up so that you get that potential divergence intra-bar, and actually the confirmed divergence can start flashing intra-bar. So you can watch it whether it locks in or not and into the end of the bar. And quite frankly, counter trend trading is the quickest way to ruins from my perspective. It's so much easier to use the powerful tools and take the signals as they are meant to be. The work is incredible and the tools are incredible. Following the rules is up to the trader.
Now, I did not go ahead and have my divergence indicator and divergence tracker, many, many, many moons ago. Again, it took us 2 years here to get it right and so advanced as it is now. But I'll tell you right now, my biggest losses in my trading career were directly the result of trading against my indicators. That's just an absolute certainty. And trading against my indicators is a bad move. And I've traveled all over the world. I've yet to find a full-time counter trend trader that's truly successful continuously. So with that being said, again, there's a lot of odds and probabilities stacked in that this could come back down. But my argument was, how about we wait just a little bit longer? Kind of like my trading last week, gang. How about we wait a little bit longer, right? And right here, there, look what happened. Now we went ahead, we went back to a champion trend sell zone, and we went ahead and went back to a sell on the champion cross on the 5-minute chart. And on the 1-minute chart, we had the sell zone, and you had the champion cross, and then you had wealth signals, breakout forecasters, all those wonderful wealth charts exclusive tools that you were saying, hey, go short. Well, that's where Ziad really shined. He went ahead then and got back on track and then focused on taking, short side trades. And, I think those of you that were in the room, several of you got to see some of the trading that he was doing there. And, that's more quality. That's high quality. And so I want just people to see the difference between lower quality and higher quality, just like I did in the video last week. It's great to be up $1,450. I was up last week, right, when I did my trading. But just because I made money doesn't mean that I couldn't do better. And so I like to show you in these videos, because trading can involve loss, not just a reward. So I'd like to go ahead and show you that. And like in this case, Z had taken the short side trade here when this was bullish and this was bullish. In my opinion, big no-no. Up here, taking the short down because of the negative divergence. Negative divergence says stay out of fresh longs for sure, but it doesn't mean necessarily short. Wait for it to go ahead and go sell and sell here, like the champion trend and the champion cross here, and then look at your time frame you're looking to change or trade. Look, you're getting all sorts of signals. Now that's where it shines, and that's where Ziad really shined today in the live trading room with that trading right there. So I hope what we've done is we've in this video showed you that it's great. You can do some wonderful things, and even when you do something wrong, you can kind of stack the probabilities in your favor, or, like here, having the negative divergence is a huge stack in the favor. Remember what I showed you over here, all these different examples and, all those divergences and how incredible they were. Well, that's wonderful. But really the way I use divergences, and I just want to impress that upon people, is don't use it to get into, or to get into a short against the trend. Use it to back off of a trade. Let's go ahead and take those, a lot of those chinks in the armor out of them wherever we can. Trading, there will always be losses in trading as part of it, but how many of them we take and how quickly we mitigate them is what's going to separate people. And these are big lessons that I've learned over time. And so Ziad and I wanted to share those with you. So, for Ziad, just want to have you say a goodbye there. Great job, net on the trading, but some of those were learning opportunities of what people could do better. And I don't know if you want to share any closing thoughts on your end.
Well, you know what, Rob, the tools are incredible. And the fact of the matter is you let people know what they need to hear, not what they want to hear. And that means following rules and signals that are exceptional. Sometimes that means waiting. And patience is key, and you're teaching me that each day. Have a great weekend to everyone, and looking forward to another great week in front of us. Back to you, Rob.
Absolutely. In fact, we have the big 3-day intensive for all the Wealth Charts members next Wednesday, Thursday, and Friday. So make sure you blocked off your calendar. You've got a whole bunch of us that are doing the 3-day intensive training. That's on top of that 6-hour training that Ziad just did for you here over the past weekend, where he went ahead and last weekend where he did 6 hours and broke it up into 12 different segments, teaching you a bunch of the strategies. So great job there, Ziad. I'll look forward to seeing you, of course, next week's special events. And for all of you, please remember these things, because we want to see you be the best you could possibly be. And again, if we could just work out some of those kinks, for some of you, and get you more to where we can, instead of being so cautious, we get you to be calculated and confident. That's my goal each and every day, to knock out some of these places that we don't need to be, and identify the places more we want to be. Okay, take care, have a wonderful weekend, and we'll see you next week, gang. Take care. Bye-bye.